Hello, fellow traders. 'Tis I, the Rumpled One. Monday, February the 4th. Let's talk trading. The year's 2019. How to trade like a pro. I think I mentioned something about professional traders or trading like a pro about a week or so ago. And then suddenly, in my email, I'm getting all these different ads and talking about trading like a pro. It's just too funny how it happens. It seems like, somebody gets a idea and everybody's talking about it. I'm not saying I'm the first, but I just find it amazing how often that happens. And I've gotten a couple of emails and requests out on YouTube. It's like, hey, teach us how to trade like a pro, teach us basically, hold my hand and give me some training wheels and teach me. There's really nothing wrong with that. But there's something you have to let go of. And that's the idea that there's some magic secret, some magic formula, some magic indicator, some magic system that all of a sudden is going to make you successful. It doesn't exist. I mean, that's like sports is kind of a hard to use as an analogy because sometimes it's physical. But the point is, if you want to trade like a pro, you're going to have to practice like a pro. You're going to have to do the hard work like a pro. I mean, if you're a boxer, there's no magic formula. You got to get in the ring and practice. You got to hit the punching bag. You got to run. You got to do sit ups till you puke, You want to be a star baseball player? You got to swing that bat in the batting cage till your hands bleed. You got to field, 1,000 ground balls a day, catch 1,000 flies. There's just no easy shortcut to success. But, in trading, we're kind of led to believe that, hey, psst, look, come over here, look, you get this magic indicator I wrote, and, you'll turn a $90 account to an $800 account in just a few hours. I've seen that out there on YouTube. And like flies or moths to the flame, here come them traders. You see, it starts right here. Money and risk management. Because you got no money, you're out of the game. So, no matter what you do, if you want to be a pro trader, you have to make sure that no one single trade can take you out of the game. And you do that by setting your stop loss in the appropriate place for your position size so you don't risk or lose more than you are willing to lose per trade. So if you've got $1,000 account and you're not willing to lose more than $10 a trade, and you're trading one mini lot at $1 a pip, then your stop loss is going to be 10 pips away from your entry. And it's just that simple. And if it hits it, you don't move it, you don't scratch it, you take that loss in stride and you keep on going. Because you see, on any particular trade, no matter what method you're using, you can lose. Doesn't matter if it's one of mine, if it's some squiggly line method, something you came up, any particular trade could be a loser. Just like any particular trade could be a winner. Point is, what happens after 10 trades? What happens after 100? What happens after 1,000? Do you have some built-in edge that you can exploit to make money? And you see, that's it. That's all there is do you have some kind of edge that you can exploit? Now, yesterday, I was talking about somebody asked me about all these different systems that I have. And I told them that, every system is basically trading off a horizontal line. And I mentioned about the ATR range. And you see here, we've got the daily ATR range here. And in the blue, we got the weekly ATR range. Now, what I did was, I wrote this indicator called ATR lines. Because, some people use ATR 10, some people use 5, some people use 12, some people use 14. And the thing is, there's no magic number. So what I did was, when I wrote this indicator, I said, there's no magic number, so what should I do? So I said, well, let's start with ATR 2, and then we run the cycles, 2, 3, 4, all the way up to ATR 14. There's going to be a minimum, and there's going to be a maximum. And that's going to give me a range. And that's what the whole ATR range is about. So you see right here, we've got an ATR range where 2 was the max and 6 was the min. Right here. Okay? And what we did was, now we plot this. So we look to see if price gets in there. That's when we look for a reversal. Okay? And that's one of the, as I think Sam Seaton talks about, his odds enhancers. Okay? Even though there's no odds in trading, only statistics. No probabilities, only statistics. So, and that's interesting. That was, whoa, I think I just accidentally sold. Isn't that interesting? Magnified market price, my period current. Let's make it D1. Okay, so you can see here we've got the range here. We've got 59 pips, and the week and the day are the same because it's the first day of the week. So right now, 59 pip range, not much of a range. But is enough for a rat zone. So you can see here, we put in a high. Right there, new daily high. Came out of that H1 wick zone, you can see right there, started to go. That was right here, highest open. You could take in that short. Thing is, we don't know what's going to happen next. So you put the trade on, okay? Put the trade on, have your stop loss in place, and you sit back and wait, because that's all you can do as a trader. And that is the secret. Is realizing that once you put the trade on, there ain't much you can do. If the market gives you a chance to take profit, you take profit. If not, you get stopped out. Or, you could always scratch the trade if you don't think it's working your way. But that's it. That's all you do. And it's, I can't stress it anymore, but that's it. You want to be a pro trader, or trade like a pro, is you follow your system, you don't second guess it, you manage your position size and your stop loss, and you see what happens. That's it. There's really nothing more to it. This is it. That's the key right there. Now, we look at the weekly. Once again, gaps filled. We're in that upper wick zone. We already exited one time. We're still above the yearly open and monthly and weekly and daily right there. But it's just all horizontal lines. Now, once again, first day of the month high was here. We talked about it yesterday. But you can see right here, the first day of the month high broke out of it. You took that trade. And the first day of the year, right here, there was the high. It broke out of that too. Now it's come back down. But once again, those were triggers. Green at the line, you go long. Okay, red at the line, you go short. Here, you may have stopped out a couple of times, but here, now paid off. And that's it. I mean, you took the trade here, maybe you lost, or maybe you took the trade here, you took the trade here. Okay, so you lost. You took the trade again, maybe it didn't stop you out, and now it paid off. I mean, it's the same trade, it's all about timing. But remember, if you took the trade here, you didn't quite have the same range as when you took that trade here. And remember, I talked about that ATR once again, looking at the statistics. And let's see, where's that range? That's the high minus open. The frequency distribution of the range. You see here, it's usually going to get to be 70 or more. It's going to be 60 or more too. But you see here, in that 60 range, which is right about where we are now, 58, 59 pips, you see, there was a chance there could be more. And back here, when it was 50, before it hit 60, and that's one of the reasons why I wouldn't have taken that trade. I would have waited to see if it would go a little bit more. Because remember, you're either trading towards the open or you're trading away from it. And before it hits its range, you should be trading away from the open. Okay? Now, you see here, the range of day one, we popped out of that. And once again, this was an outside candle. And you see here, we had that break. And the range 59, you see only 4 pairs over 100. And see, here's the yearly H1 highest open right there. Seeing that, that would have been a sign. Hey, this is the highest so far this year. This year, okay, is what? 5-6 weeks old, baby. Once again, you could have taken that trade and been profitable. But once again, knowing trading off of those highest opens, H1 highest opens, because price has to do what? It hits it, makes a new high, it retreats from the high. Once again, had a nice buy zone trade here. Still haven't taken out that pivot. Rat zone, see it put in a, here's we had the expansion. Short anywhere in here, paid off. Even if you got in at the 74, it still paid off. We still haven't hit the pivot. So maybe not today, maybe it'll fill tomorrow. So we've got a missed pivot. We're away 45 pips away. Price action, once again, you want to trade like a pro. I mean, this is one of the simplest things to do. You don't even need the 3-level ZZ. It's real simple. You see price making that high. Red at the line, you go short. You see it put in a low. Green at the line, you go long. That is it. You put your stop loss in, maybe 10, 11 pips away. Position size accordingly. You take what you can get. I mean, it's that simple. There's no magic to it. There is. In and out of the wick zone, you can see we're in it right now. Once again, just trading at the horizontal line crosses. You can see here we the bid price crossed above the valley of the ask, and you can see prices moved up a few pips since then. And on the Einstein line that I set like last night, you can see here what happened. Finally got the move, came back in, and you can see here there was a little move out there. And once again, you want to be a pro trader, use the Einstein line, horizontal line, where as soon as you open a chart, whatever price is, put a price about, a spread to 2 spreads away, and then just take it and see what you make. It's that simple. Just remember, it's not what you trade, it's how you trade it. Get out